The US stock market is about to exit correction territory, and guess what? It's the fastest in 10 years. But what's going on behind closed doors with some of the largest Wall Street dark pool transactions? Today we discuss that along with the oil markets and the huge rebound that we saw on Friday. Hello, ladies and gentlemen, and welcome back to the special weekend edition of the Markets Around the World, where we cover stocks, commodities, and cryptos together. We'll be talking about the critical resistance points for multiple markets around the world right now, including whether we could see an island reversal for the NASDAQ, as that would be a huge momentum shift. We'll also be talking about oil coming off our most traded zone number 2. Can we see a resurgence in black gold? And more importantly, what will we see going on with the US dollar moving forward? A new low cracks what has been an exceptional trend now for quite a few months. That and more coming up in the special weekend show. Well, welcome back, everybody, to the show where we discuss macro lead indicators and the hottest charts together. If you like anything to do with markets, remember to subscribe and, of course, smash that alert button. One-day performance was cross in the markets, but financials did well. Semiconductors doing pretty good into NVIDIA's earnings result this week coming. And, of course, energy was the sector to watch. Just a reminder, we're launching our new newsletter, VIP free weekly newsletter. All you've got to do is click on the links in the description down below, first name, email address, and you'll go in. Remember, spots are limited as we're just launching it. Let's move over to the S&P 500 Performance Thanksgiving Report. Yes, this week is where we go into a period of time that tends to be a time of giving, but maybe not on the Monday. In fact, 17 up to 19 down has been the record for stock markets on the Monday percentage change into Thanksgiving. It's not that great necessarily on Tuesday either, with the average return only being slightly positive. But Wednesday turns into a much better session, along with the Friday that can have low volumes, but does tend to be good. So will this week repeat what usually does occur, a weakness in the Monday session? Well, here's what happens after Opex from our experience over the last kind of 70 years. You can see here that when we go into that 17th, 20th, 21st kind of earnings period, we know that that's where the weakness tends to lie in markets. And then there's a nice strong recovery coming through to the end of November. So if markets are going to sell, it's generally going to be very, very soon. And that's kind of in line with what we've talked about with the number 7 and, of course, 7 VIXpirations. Yes, not only did maximum pain Opex just happen, which, of course, didn't hit some of the levels that you may have expected, and we'll talk about that later on today's show, but VIXpiration generally brings sideways markets to even down markets. And you can see in the previous periods we've seen this happen, it's been pretty negative towards markets straight after the VIXpiration. It doesn't last long, but it can be there. Here's what happens after options expiration according to the Russell 2000, which does tend to have a fairly positive kind of return for the week after Opex, which you can see here, which is a 71% higher, but the Dow Jones only 57% higher in similar circumstances. More percentage stats coming your way. Let's go through the bull and the bear notes. The first one is, of course, bullish into the end of the year, 27 and 3 in similar situations where we've had strength through the year. So again, bulls really looking at a positive 2023, but don't worry, bears. I think 2024 might be a little bit more exciting for you, because there are some really worrying signs on the horizon if everything works out the way it used to. 50% bears into almost 50% bulls, a huge switch in sentiment reports. This is now week 2. And of course, this is usually the week where we start to see that little bit of cracking going on in the markets if we are to actually trap a few people into bearish positions. Remember, the bear positions that come through now may be short-lived due to the thrust figures that we've seen. We've seen so many Zweig thrusts, Whaley thrusts, so many different breadth statistics that are telling us that markets are actually quite bullish at this phase and at this time. Now, we shared this over on our X account, links in the description down below if you want to check it out. And this marks an incredibly important point for treasuries. Now, you might be saying first outflow of treasury funds since February of 2023, but really it's the first outflow for a very long time. You know, if this continues, that is incredibly significant. Now, you might think, well, that means treasuries are completely stuffed. Well, I posted over on our X account this particular chart here. If this shows us a continuous trend, which we just saw that big managed funds started to slowly react to less positive buying, You might think, well, that means that it's the end of treasuries. Well, the exact opposite when you're in overbought territory tends to happen. This, in fact, it can correlate to bullish periods in time for treasuries. And we'll be watching this on the channel. So definitely join us exclusively for these reports as we go through what's going on in treasuries from the biggest managed funds around the world and whether they're positioning in strength or weakness. Now, if they do continue to position into the weakness side, and this is actually the top end of treasury strength, then that is going to react totally differently to what you think. I've seen this a few times before, and it tends to always work out in the favor of the buyers, even though that might be going totally against what you're thinking right now in terms of the amount of huge amounts of liquidity that's available, no one wanting it, all the storylines and narratives that we're being fed. Well, I still think that behind the closed doors, you might be surprised. 30-year bond performance over this period of time. Of course, we've already reported that we expected yields to drop off between November 6th to 26th. So far, that is occurring. And of course, it's a great statistic there. We've also talked about if we get yields dropping off, how that could work into the Russell 2000's favor. Remember, there's like 500 companies in the Russell 2000 that don't really make that much money. If we go a lowering of long-term yields, that's going to be great for them to refinance. And of course, that could bring it back. So far after this report, this is basically where we're at in terms of the Russell 2000. And if you're feeling bullish on it, statistics would be on your side between the mid-December to January, February kind of run that we've seen several times. Now, of course, warning, this did not happen in 2022 into 23 in the same way as it has happened in previous years. Nothing is certain out there. 5 times, that's the charm in terms of months that we expect the Fed to pause. Never forget, and we'll keep talking about it until the Fed has paused, if they do in December, that when that occurs, we have never seen a rate hike cycle past that point. 5 months of hold tends to be the end of the cycle period, and that has been 100% of the time. The other thing to note is that 11 of the last 14 ended up in recession. And I think this is a really important statistic because if we break down a recession coming in 2024, what does that mean for markets? Well, first up, we need to watch US 10-year yields, and they're starting to drop. We'll look at that later on today's show because it's showing us timeframe changes of trend. And that when we go into these Fed rate cuts, remember something's broken. But don't rate cut because they're nice people. They rate cut because something broke and they need to try to quickly fix it. The Fed goes too far in both locations. Every single investor and trader would agree with that. They break something doesn't work. They're like, whoops, we better go fix that. And then they overreact in the other situation. The average sell has been pretty big. Now, I'm not sure if that'll be that big again. 23.5% average sell off after a Fed rate cut and 195 days to the low on average. 2024 is going to be super exciting, so make sure to subscribe because we'll be following that as closely as we can. Now, for bears out there, you might be saying, well, this market's got to come down. Look at all these gaps. Unfortunately, the truth is that when we get these gaps, get these thrusts and these breadth kind of hits, we do tend to see further strength coming through markets. 4 unfilled gaps over 0.5% in 3 weeks. The stats are not in your favor necessarily into the negative for the next coming months. So that is something we need to keep in mind along with this one, which is of course the slow melt up. This is exactly how the charts look right now. Huge moves after the CPI and before that, then we're now sideways at this point. If we keep melting up, and we'll look at some of the triggers that could tell us that we're melting up to new break highs, then yeah, the stats say that again, it is very, very plausible. Sell-offs may be met by instantaneous bull demand at this point. Also, just a quick reminder, jump on over to our X account and have a look at our CTA positioning chart that I've posted up there. What that's telling us is there's huge amounts of investors going back into the markets at this stage, and they've gone and done a flip-flop from huge negative positioning to super bullish positioning after the CPI numbers and everything else. And we're getting the biggest switch we've seen in some time, and that can last for a little bit of period. So we do need to be aware that CTAs are back on board in this market. Speaking of back on board, gold spot, as we've talked about before, we're of course way higher than 1860 now, but we've been talking about a multi-month run on gold. And this comes after, of course, a squeeze event. It's actually very similar in some ways to how the Treasuries trade is going. Treasuries turn negative. You might think, oh, I need to go negative. Well, not necessarily. That means that people are going, oh, it's over for Treasuries. The Treasuries, they're losing faith, yeah? Remember, Warren Buffett has that fear and greed concept, and it's just very similar to what we're seeing in gold. That could be a multi-month. Earnings in focus again this week before we go to dark pool activity because there's a lot of trades coming into this market. We've got some big hyper growths. We've got Zoom coming out. We've obviously got Nvidia, which everybody's looking at. And this is right at the high too. Could it be the catalyst for either a sell-off or a buy? I think Nvidia is going to be in super focus. That's really the Magnificent Seven's final big number, and we'll figure out how that looks very, very soon. Russell 2000, let's go into dark pool activity. Monster trade, guys, huge position. And traditionally, this has been, I think at these points, a fairly positive sign. The Russell 2000 just getting a monster on it. And while it might not get an instant reaction off it, it certainly is there. Speaking of other huge trades coming through, I'm a little bit more worried about these ones coming into the Monday and Tuesday next week. A big dark pool transaction going straight through in the queues. That usually shows us that maybe there's a little bit of take profit targeting. We see the same thing on the SPY, two massive transactions going in right on these highs. It could tell us that it's just accumulation and we're breaking out. Don't get me wrong. This literally could be still buying. That's a little bit late to the party. But if it is selling and we see those signs, we'll need to be looking for the trap this week because I'm kind of going with if we do end up getting a sell-off and then we get this huge rebalance back up, get ready for a squeeze. It's going to keep squeezing and we'll be there if that does occur. iShares Core S&P as well, the IVV, we reported this on Thursday. Huge amounts of transactions again in on the high, again at this same level. And just to throw a smattering of single stocks, we've also got AMD, huge transactions at the high. It is possible they are buys. We're looking for price action to confirm it. Now, we talked about treasuries, and I just want to mention there's a monster trade on treasuries as well. Now, this one is at the high, and I guess you could say, well, it's going to go down after this. I feel like, for a lot of investors, they're going to be looking at it and they're going to say, well, I'm going to have trigger points. And that trigger point may have actually been to make a new high over all of this structure. Remember, where's that big transaction happen? Right at the breakout, not necessarily before that. So again, could be actually a longer term positional buy than sell. Now, this one already has been reacted to. This is the huge position coming into the USO. Oil, of course, reacting super positively after this transaction. It came in right on the close. So it shows you that sometimes you get that big reaction to it, especially when we were in oversold territory. And we warned against being too negative on oil on the Friday. And of course, it ended up going up 4% on the spot. Another one that's getting a huge transaction in at the moment is, of course, anything to do with biotech. Probably one of the worst sectors of 2023 is very reactive to yields. Now, if you believe the Fed is pivoting, if you believe that rates will continue to drop because there's a sickness in the economy, the US 10Y drops, etc., most of these businesses make no money, so they have to refinance at incredibly expensive rates. So that could be a super positive for them as well. Let's move over now to the unusual trade option activity that's been going through. And it was another day of massive calls, 57% calls, 43% puts. But I will say that this was still disappointing for Opex. That really almost all the trade came through on Tuesday and Wednesday of this week. And that's unusual. And of course, we also saw a slowdown in Russell 2000. For the first time in a while, it wasn't above the 90-day trade average volume. Tesla getting a lot of excitement on it. Intel, of course, still coming through with a bit of rallies. And we saw Chevron and a few other big oil companies come back in. Another one was interesting that we're continuing to see some strength through a whole bunch of these kind of hyper stocks. And ARK, of course, coming back into focus. I've noticed things like Palantir, ARK, Coin, Enphase Energy, all of these kind of hyper growth style stocks or stocks that were really hated for a while have started to improve. And we're seeing that across some of our long short style scenarios. So we'll look at one of those very soon as well together into this weekend. Let's move over to the best performing sectors of Friday. Energy, metals, really happy with the metals trade, and obviously also excited to see biotech finally regain some strength. Gold was a little disappointing after having a great rally on it, and of course gold was the worst for the sector. But when we take a look at the last 5 days, you'll notice there's a little bit of a different scenario. What's been doing really poorly? What's been doing well? Well, we've actually had home builders continue to hold up, and we'll look at that chart because that could tell us that a squeeze is coming. I really love the metals. Even if you're a believer in stagflation and the economy going bad, metals should theoretically still do well in stagflation. And generally speaking, when metals have rallied the way that they have in the last 2 to 3 years, then you're usually in a commodities boom. Now, commodities booms tend to last 7 years on average, and they can go for a long time. A few of you in the comment section have said, what I don't believe that you should be looking at high gamma stocks anymore, things like the tech. You should be thinking about other things. Don't worry, I'm still thinking about it for all of us. We're all discussing this concept. And of course, we'll look at commodities as a super special on this channel moving forward and talk about the 7-year cycle because it can be quite an aggressive one if it does come true. This time, of course, could be different. So we'll need to look at it. Another one of notice is the regional banks. KRE doing a 5-day 9.28% split and financials also doing okay. That's usually a good sign for the bulls if financials are coming with the rest of the market. So let's now take a look at the charts, and we start off with advanced decline. We did see some advances in the markets, although I don't think it's a strong enough thrust. Just to keep in mind, this was a monster thrust that we saw as of the CPI number, and it's one of those ones that's a real standout. Last time we saw such a big number was November of 22, which obviously kicked off some big moves. Another indicator that I like to look at is, of course, this one here, and I'll just say that this is improving. A new high is a big deal here. And basically, we've started to see a real strength. And let's just say that this is something that I track to see whether bonds are actually improving or not. And on this focus, it has shown us that bonds are improving and the economy is improving according to the market anyway underneath. Here's another squiggly line, which is the Bank of America high yield effective rate. And you can see that that spiked up a little bit. If this continues up and we see it break through this and the market's still hovering at highs, I'm going to say that is a huge warning sign. At this stage, though, no warning coming from the effective rate. Put call ratio going back down, showing us that calls are getting jammed into the system. This is completely stark to what we saw with the huge amounts of puts that were in the system coming into the CPI numbers. And of course, that's what really held the markets up. There was actually a lot of profit to be made by not paying off the puts over the last couple of weeks. But now everyone's turned absolutely bullish. I'm seeing sentiment across the board. And what I'll do is I'll update on our X account when I get the new numbers straight away on the Monday, when we get to know what retail traders are effectively doing with their positions. If they're moving into the bullish side across all of the indices and the main boards, then we know that that is a huge warning sign again for a potential pullback coming in this market. So although they still should be maybe short-lived. Move index dropping off again, showing us that volatility is dropping out of the system. And here's one that I wanted to show you. This is long, short, fund kind of concepts. So this is ARK K versus SPY. Now, I'm not saying that ARK is the greatest fund in the world. It's not. But let's just say it represents hypergrowth. You'll notice how poorly hypergrowth has been doing. I mean, this is just, it's an absolute ridiculous ratio when you think about where it's been. But look at this base bottom that we're starting to form here. And of course, we can see that we've had our low, we've kind of had our selling climax, we've been basing around. We've actually got a little change of trend in here on the smaller timeframes. Another one that you're going to want to bring on your charts in the future is IWM/SPX. If we do see a recovery in markets and we believe this is real, then we really should see this ratio start to break out. One of the alerts that I've got set is just above here. And you can see where I'd put it around that 0.4 plus ratio. So we'll move that there. And if that does occur, then it could really signify the end of the downward trend for the Russell 2000. This has been the worst performing of the major sectors. And you can see here that it's really been in a descending channel. That's basically the trend line there that we haven't actually broken through yet. Something we will be watching very closely, especially if it starts to go in the back end of November into December with those seasonal periods. Let's move over to treasuries. Now, treasuries were bouncing, and this is a great technical sign. Obviously, I've talked a lot about effective volume. This is my favorite when I see huge amounts of volumes in trade. And if we zoom it out, there's only really been one other period that we've seen such huge volumes, which was around here in the lows. Now, remember, everyone's losing faith in it. That's not bad. We've got memes. We've got everything that is going negative, and there's huge amounts of liquidity, and every country in the world supposedly is scared of them. Yeah. All right, we'll see about that. But we'll end up saying that this is a huge basing formation, generally speaking. It could easily do this still. That would be even better, in fact, for bulls longer term. But yeah, some significant switches. We've seen things like trend lines being broken out, new highs. Obviously, we've got gap fills to 92.50 if that's what it chooses to do. But Treasury is certainly feeling like it could be basing off here. Do you agree with that statement? Let us know in the comments down below. It's great to also see US Treasuries and US 10-year making a new low. Now, obviously, this is what you're looking for if you're a Treasuries trader. You want US 20Y, 10Y, 30Y all moving down. We ended up seeing a weekly close right just below that wick. Now, it's close. Let's have a look at the US 30Y. So we can see what's happening here. And you can see they're all really close, razor thin numbers just underneath these levels. Now, the 10Y is usually the one we pay most attention to. So it could easily do something like this and bounce, but I've got to say that is still a -4 yields. And with the first time frame changes of trend and everything else that we're seeing, yields may be done here. It actually might be that we see a pause again in December. And at least statistically, the market's going to like that because, of course, the market knows its own statistics. I'm sure of that one. Let's move over here to RSP, equal weight, pretty much sitting right bang on the same level. No information from that. The Federal Reserve and central banks around the world, a huge reason for the bulls to be excited. Take a look at these injections. I mean, it's just dodgy. But anyway, it is what it is. And we've seen this a few times before. Obviously, when we get injections this big, we have to be paying attention. And while we can go into sideways markets or even down pullbacks, if these continue to inject up, that's going to be a very positive sign for bulls moving into the end of 2023. Dow Jones Transportation Average, how does that look? Well, it kind of held itself. And the one I'm looking at is actually going to be home builders. We've got an alert set above here. We'll do it again. Let's do an alert together just in case. And if we do manage to get above here, it's a pretty bullish sign that we're moving out of that consolidation. Remember, markets can stay overbought for a very long time. You might be saying, Tom, RSI, triple divergence, or MACD, or any other divergence indicator under the sun. Ultimately, I say price action and squeeze. So that's the kind of thing that happened here. That's the thing that happened here. And they can do it. They can keep melting up for quite some time. So that's the problem with markets. We need that catalyst. We certainly didn't get it on Friday. We didn't go underneath that 81.30, which we'll also set an alert for. And we've basically got things like home builders trapped. We know that that was a good early indicator last time. Maybe it will be again. What about metals? Well, copper. Really loving the trade on copper at the moment. I like the fact that it's done all the things it's done. You might say, well, it's not enough percentage. Sure, but it looks pretty good. And of course, commodities and copper and these types of things have been improving recently. The US dollar, huge sell-off, another low. Now, this is good for both bulls and bears. Set alerts above the high if you're feeling bullish, because obviously it's now taken to a new low. I wouldn't be surprised at all to see the US dollar smash down into 103 in terms of the index. 103 kind of 10 or something like that would be a pretty interesting level. But the weakness in the dollar has been something we've been speaking about for a while. We reached this level, we went neutral down, and then, of course, we got some evidence here and here that we were going towards the bear side. CPI numbers ended up telling us that that was the way it was. And this could be a huge switch for dollar traders. You know, if this ends up being the end of the US dollar for now in terms of the trend up, then we could be going all the way back down into these levels here of 98. So be very careful here. We also spoke recently about how we saw so many of these major currency pairs starting to find bases. One of those notably that we brought up on the show was the Australian dollar, which so far has been going incredibly well. Will the Australian dollar continue to hold? It's all about relative rates. So euro, odd, pound, many other currencies around the world starting to strengthen a little bit after getting absolutely destroyed by the US dollar's strength recently. GDX or gold in general, we're seeing that, of course, nice island reversal here. Gold still looking pretty good. Inverse head and shoulders. We'll want to see yields continue to drop for gold to do well, though. And if we take a look at gold spot, it did end up having a little sell-off here. And you can see that we still hold a few of the up-down trend lines and those types of things. Right on that support, you'd want to see gold break to a new high here. And then, of course, I think if it does that, it's probably going to take out this high over here and go towards, maybe testing the all-time highs. So gold, finding some rallies. We do know that we now have this huge 1994 area of resistance. A close above there is significant. I think it could move into the 2040s and 50s from that point. Oil, huge rally off the most traded zone, back into the structure, oversold, weekly levels. Of course, 20 moving average on the daily, sitting at around 80. I'm not sure if I'm going to go anywhere against negative oil right now with the strength that we just saw. However, I don't feel like trading it from here. Obviously, you've got supply at this point. Sellers will try to commit to that. And I'm not really going to go really bullish on it until it goes past 80. If that happens, then we can maybe get a replication trade moving through. But at this point, it's still down, although most traded zone number 2 would have been a fantastic TP zone and something that I'm sure many of you were looking at. Let's move over to Tesla. What's going on here? Well, we didn't quite fill the way we'd like to. Of course, we hit these highs. We didn't quite get to that 224, 222 zone, which is where we would have liked to see Tesla bounce. but it did get that bounce. I could still see it coming down a little bit more. So at this stage, relative strength coming back into Tesla. Obviously, the trend is actually bullish at this stage, but we got what we wanted last week, which was the gap fill. So I'm going to go to neutral at this point to figure out what's going on next. And at this stage, we don't really have that answer. Have a look at the weekly here. It rejected the weekly 20, which I think is also an important point. We've seen that held up until it went down. So again, for Tesla, it's stuck between that 200 on the weekly and the 20 on the weekly. So really, really trapped within those two areas. Let's move over to the market indices now. We'll start off here with the Aussie, the Australian index. Now, I still think it's possible to go to 7,000 first and then maybe above 7160. At this stage, trend is up, so I expect pullbacks to be met by bull demand. And you can see the trend line break on the Australian market. US 2000. Now, this is where things got interesting. So I was talking to our club, our Market Masters Club, free trial, and links in the description if you're interested. And we're talking about this level here coming into the Fridays possibly being a sell area. And the reason was quite simple. We saw that huge rally, obviously a big spike down, and then we saw the sell-off. Yeah, okay, this is role reversal. Yes, the trend's up, but we know not much trade has gone through on this level of the CPI number. Basically, this happened pre-market, so you might assume there's volume there. There isn't actually that much. So we're kind of looking ideally for something like this to occur. And this is an area where the US 2000 should be testing that resistance. Will Monday come true to be a negative session? The amount of gaps on the Qs remains ridiculous. I mean, there's actually some here I haven't upgraded in the recent ones. You can see there's just so many gaps. Again, they don't have to be filled right now, but notice this. It's a huge gap up off the CPI number, then it's sitting. Now, if that gap's down, what does it create? An island reversal, and that would be at the highs. So that's something that we could be looking at if you're a potential bear. At this stage, trend is up. Obviously, melt up is a real thing, so we know that that's still possible. And we don't really have the signals to go weak yet. And I'll explain why. Let's have a look at the US 100, the NASDAQ. No new low really triggering off enough sells here, which of course means that it's really a guess or a tough one at this point. But I like to look at the SPX. SPX closes right now, red box, still again a resistance point. Let's look at the US 500 on the futures. And this is where we got that kind of reading that we were looking for. So we know that this is where that bottom demand is. And that's around that 44, I think it's 85 zone. Yeah, 86, 85. We came back up. We actually tested the highs and we saw a sell. Some people will be calling double top now. We'll find out. We don't know that. I'd like to actually see a rally into a drop. That would be pretty sweet. And then move down below 44.85. Now, if we do that, it opens up the ability to fill this huge candle over here and actually move fairly swiftly down into the next zone, which is 4,400 flat. I was kind of hoping it would do it on Opex, but of course it didn't do so. It just decided to hold up as strongly as it could. Here's the market that, we're looking at in terms of base, and then of course underneath that 43.40. So it's real possibility to get down to these lines, but it all depends on how this market continues to trap here. Remember, we know that the stats show us melt-ups are the more likely scenario. So to get pullbacks is going to be hard, and therefore we're going to have to be more sure of ourselves. Speaking of very difficult pullbacks, that's of course Bitcoin, which continues to be quite annoying. This is in a melt-up, so it's what we call also a dull market, although it did get a little bit more active. A dull market is where you get that slow kind of grind through. Now, we haven't seen a grind yet on the S&P 500. We're just starting to see it sidewaysing. But if we do start to get a grind, we don't want to go against that grind just yet. Same for Bitcoin. No new high, still stuck, still no new low. So we're trapped in a zone, and the trend coming into that trap, well, it's bullish. So we have to kind of think about it that way. Ethereum, that's also dealing with some stuff with 2100. However, Ethereum, look at this. It does go weaker here. So Ethereum is much weaker than Bitcoin, which you'd expect. But we're still in that demand. So here's the new demand level. And you can see Ethereum is bouncing off that. Maybe a watch point would be 2,000 on Ethereum. And if it does rally through that, it could be going for another test of the 2150 zone. So let's have a look at max pain for the Friday and just kind of discuss it. Obviously, we didn't get any 440. We ended up sitting around 450. It closed around that level. Max pain was 435. I don't think we were ever going to hit that after we saw the CPI number this week. Remember, it doesn't always have to happen, and believe me, Wall Street still did very well. Take a look at all those puts and calls that they made tons of money off. So 455s, no money made. anything low on the puts, no money made, and still pretty insignificant money made around these levels in here, I'm sure, by most options traders. The main thing here was it ended up staying below 450, and I would like to see a 440. That would have been sweet, but it just didn't happen, and we didn't see any triggers. Remember, this is more of an exceptionally extra little bit that you add to your technical analysis and to your charts. When we scroll through for the week ahead, there are a few bits of news, most notably probably the earnings, but then we also have a few bits of news coming out for different countries around the world. We've got unemployment claims, UOM consumer sentiment from the US, which is on Wednesday at 10 a.m. New York time. And then we keep scrolling through and we end up going down to flash manufacturing PMI, which happens on Friday at 9:45 a.m. So it's not so much that there's much news coming out this week, of course, with Thanksgiving being a holiday as well for the market. It's really the Monday that really becomes the question mark. That's where we see that weakness traditionally, and then usually we get a little bit of strength. It's what happens after Thanksgiving that can also be a bit of a surprise to market traders, and more on that as we cover the markets this week. Just a reminder, if you're interested in joining our free VIP weekly newsletter, then freely newsletter, I was going to say, then you can do so. Links in the description down below. It's still open for now, so make sure to do it. And of course, thank you very much for your support. Catch everybody. Have a great weekend. Bye for now.